Hello everyone, very good morning and welcome to this free webinar on intraday trading. Our discussions today will be centered around intraday trading, and for those who are watching this on YouTube, if you have already not subscribed, then subscribe. And apart from just the YouTube channel, there are other social media platforms where you could catch me and get to learn a lot, and therefore just dive in into this webinar and the entire technically sorted movement. So technically sorted is something I started in 2015, and the purpose was that just like me, when I had started off in trading and markets, there were a lot of people who were not uh, adept to a certain a professional conditioning in it. And as I grew up, as I learned more, I did education through Chartered Financial Analyst, the Chartered Market Technician course. And when I did education through the best in the world on this subject, I really came face to face with, yes, this is what trading is about. This is what trading psychology is about. This is what technical analysis is about. And a lot of myths that were around trading for myself, and a lot of half-baked knowledge which was around trading for myself, that started getting clear. And in 2015 is when I started to teach people also, because I really felt that adds value in the long term rather than giving out a service where you are posting calls to people for a piece of money. That doesn't really add long-term value, okay, and that doesn't really give the people consistency. So that is how technically sorted started. I worked with a lot of traders, hundreds of traders in total, and if I put my students together, I've seen more than a few hundred traders evolve in front of me. I know what the different stages are, what the different ages and the different age patterns, what are the different thinking processes which actually make a trader or improve a trader, and one needs to go through these certain processes to take the best out of themselves. So basically it's a lot about the behavioral modeling of the person. It is a lot about the intellectual aptitude of the person, and there is a lot about the fact that one needs to be creative and really passionate about this. So I'll just ask you if you can raise your hands, all of you, how many of you think you are really passionate about your trading? There's a button there, raise your hands and show me if you're really passionate about trading, right? Perfect. So this is the first step, and the very first step. I feel a lot of people over here have raised their hands up. The rest I don't know, but the most of them are really passionate about trading. So the first step is to rekindle that passion and continuously keep that fire alive. See, people who have made it big in the world, people who are said to have made it big, connected their dots, etc., are the ones who really keep this fire protected within them. You have to keep this fire protected within you, which takes you ahead and pushes you ahead and makes you do things which go beyond your yesterday's self. If you are ready to take this journey towards uh, towards evolving yourself as a trader, only then you understand what are the continuous aspects of a growth of a trader, okay, and how you need to protect it. So on the very first note, welcome again to Technically Sorted. Those who don't follow me on any of the social media channels can do so now. And our webinar is going to today be around the aspect of intraday trading. Okay. We're going to have a lot of examples, and I want you all to ask a lot of questions, because as we answer the questions of one person, it helps me also clear doubts for people who have not answered questions and still may have it in the back of their mind. Okay, I've already started getting a few questions, and I've told that as and when it will be more pertinent on that topic when I'm talking, I will definitely take those up, as well as the questions while I'm talking. If you have anything pertinent to what I've just said, please ask immediately, no problem. Over here we have one of the highest number of people who actually attend market webinars around the world. I'm one of the most frequent person to give free webinars, I personally believe, and you should also help your friends by letting them join any of my Telegram or YouTube, etc., and find out exactly, get in touch with my team, find out exactly what we are about, get onto our website, find out. there's so many free initiatives I keep doing because I really believe that people should really know what they are coming in for. And if anybody later wants to join my free course, they automatically do. But really, there are people who are following me for years now over here, and I welcome all of you. I'm sorry I couldn't reply to every good morning message, but thank you so much, and a very good morning to all of you once again. Intra-day trading is going to be our topic for today. So, first of all, this is a definition of day trading from Wikipedia, and what I personally believe is a very correct definition. I want you to highlight a few points. Day trading is speculation in securities. Okay, this could also include any other instruments, specifically buying and selling financial instruments within the same trading day. Says that all positions are closed before the market closes, right? And traders who trade in this capacity with a motive of profit are therefore speculators. This is the Wikipedia definition of day trading. And I want you to note a certain few points over here. That first of all, you are buying and selling within the same trading day. Okay. Your positions are closed before the market closes. And what is your motive? Your motive is profit. Now, when we are talking about the action of day trading, the motive is profit. But one of the few things which people don't understand is that profit is only a single day motive. It's a single event motive. What is more important is the consistency. You see, there is always going to be a fight between intensity and consistency in what we do. Anything which requires you, to achieve that excellence includes those factors which you're doing consistently. Now, you may go to your dentist twice a year, and not brush your teeth at all during the entire year. Just go to your dentist twice a year. Is your teeth going to become fine, or is it going to remain healthy or maintained? Nope. But if you go and brush your teeth 2 minutes every day in the morning and evening, you are giving that consistent input. And therefore your teeth remain clean and healthy, and you don't even have to perhaps go to the dentist. What I'm trying to say is that our motive for profit over here is good, it is valid for an event on one day. But it is not really valid over a period of time until we don't understand how to add value to maintain this. Are you all with me over here? Right? How to add value to maintain this. And by the definition of day trading, all this may be correctly said. However, our aspect is how to really go about it. Right? So when we are speculators, we have to understand a few things. What do you mean by speculation? A lot of people come to me and say, sir, investing ही सब कुछ अच्छा है, investing मतलब safe वाला काम है थोड़ा, और जो trading है वो तो speculation है, वो तो gambling है. A lot of people think that investment is not speculation, trading is speculation. I believe both are speculation. It is just that you're speculating on different variables and on different time frames. So when you are an intraday trader, your time frame is just within that day. So the time frame of trading or time frame of looking at the charts, building your strategy, everything has to be, even your triggers will be different. Okay. If I just simply talk about time frames, because I believe first to approach day trading, the most important point is to understand time frames. We have to understand that market moves in extremes in any given time frame. Okay? In any given time frame, the market moves in extremes. When we have got, say for example, a phase in the market where everybody in the market becomes bullish on a very large time frame, we must have noticed these kind of times where everybody in the market becomes very, very bullish. So, you've got, you've got your sort of friends and friends and all the uncles and aunties and everybody in the market who has even not even heard of the market or not even ever traded the market, even they are bullish. Every ad is asking you to, every investment conference is only talking good about the market. Those are the extreme times when it is personally, which I have personally experienced. Those are the extreme times when the market makes a very long-term or intermediate top or bottom. Top, okay? It makes a long-term or intermediate top when everybody feels that mutual funds are the best thing, when everybody feels that, investing is the best thing or there's no other better return than equity. Those are the times when the market makes these tops. So on the longer time frame, what I'm trying to say, on the longer time frame, when people are investing, there is a larger group of people who are motivated to take the price into extremes. There's a larger group of people. This larger group of people may be investors and fund managers and retail investors, etc. And believe me, even professional investors go wrong. Professional traders go wrong. It's just that they don't go wrong every time. Right. Next is positional traders. Now, there are these investors who are investing for years and years. And then there are positional traders who take certain trades and would hold on to them for more than a few weeks. Okay? More than a few weeks. So when they are taking that kind of a position, they are sort of motivating those extremes of the market that show the intermediate term trend or the relatively monthly term trend or the weekly trend, etc. And then when we have got the positional traders, the swing traders, they are focusing on the few days. Okay, you're looking for a few days, basically, a few days here, a few days there, and these are short-term traders also, short-term swing traders, that's what's called, right? So if I sell over here, I would probably look for a target of something around here, and if I achieve that, I would exit that, and my risk reward will be in control, etc. So this is how one perceives, but as we all know, the 90% of the people in the market do not trade on rationality. They trade on emotions. They trade on what? Emotions. And these are the same people who would like at this point go along in the markets and say that, okay, probably we have bottomed out, or who would, right after the budget when the market starts falling, the next day morning they will say, okay, I want to buy, I think this is the correction to be bought into. They'll go completely against the trend. 90% of the people who behave emotionally, they are retail traders. Okay, but the agenda is to be like this positional trader who would probably go short at this point and say, okay, I want to look for a target which is actually somewhere around here. Okay, so the person looks for this target and keeps a risk reward which is, which is a good risk reward, and lets the trade unfold. And this is the rational professional trader. The retail trader does not do this. The retail trader tends to go against the trend, etc. However, when the market comes to an extreme, all the retail traders would want to jump on one side. So when the market has gone completely extreme down, this is where the pessimism was the highest. This is where the pessimism was the highest. When, people are jumping on the highs where, as if the market is now bottomed out, possibly we are now not going down further. So all these different extremes of different time frames are created by the emotional waves of different groups of traders. Okay, different groups of traders, they create these emotional waves which influence the price, right? I'm going to put all these hands down. Till now, whatever I have said, are you all with me? Please raise your hands if yes. If yes, please raise your hands. If you're all with me, raise your hands. All these traders of emotionally influencing the price of different groups, right? This is how it happens. And when we are coming to day trading, when people complain about the spike in price or the noise in price, etc., we are the ones who have created it. When there is a sideways movement in intraday, when there is an extreme movement in intraday, when there is a collectively extreme movement which is very, very big in intraday, All these are more influenced by the traders who are looking for intraday momentum, intraday trading, intraday profits. Now obviously, since intraday is a part of the intraday basically is a part of any bigger time frame also. If something is moving on a monthly time frame, it cannot do without moving on a smaller time frame, right? It cannot do that without moving on a smaller time frame. What I basically say is that before coming to these strategies, one needs to understand why technical analysis is fractal in different time frames, why technical analysis works in different time frames in different ways, right? And if you understand, if you notice, these emotional behaviors which people make are also ingrained within us as human beings. We can understand these things. And also one can understand the fact that, see, one point is very, very clear. On different time frames, the charts show the similar kind of patterns. For anybody who is properly trained in technical analysis will understand that price movement is fractal in nature. It's just like, for example, if you've got a small gear which is moving a slightly bigger gear, which is moving a slightly bigger gear, which is moving a slightly bigger gear. And then finally we come down to the hourly charts, to the smaller time frames, to the 15-minute charts. Then we can finally come down to that. So before we going into that, let me show you something which is very simple and show you how two time frames are working in different ways. Okay, so I've taken up a chart of Sun Pharma. I'm not going to do too much into this. I'm going to just show you the chart from a distance. I'm not going to go into nitty-gritties at the moment. I'll go as we go ahead. But right now, if you see, these are the zone where the price is taking a support. I'm not using any indicator, I'm not using anything, I'm just showing a simple support zone. A simple support zone from the essence of it. I personally believe to teach everything from the essence. Okay. The essence of a support zone in the most simplest language could be says that buyers are here and they're trying to protect this zone. Buyers come, buyers line up at this zone, buyers come and buyers line up the zone. At this point, the sellers have overwhelmed the buyers and therefore the price is going down. Okay. This is happening on a time frame which is basically the daily chart. Okay. Oh sorry, this is the weekly chart. Extremely sorry. This is the weekly chart. This is happening in a time frame which is the weekly chart. Okay. Okay, let me just check which time frame it is. Yeah, okay, fine. This is the weekly chart. Why? It is actually the daily chart, but it is so big, this movement, that I can call it like a weekly support. That's what I mean, right? But if I zoom in into this area, what I find is that in this area, this is what is happening. In this area, there is a support which happened in the recent past, which is only a matter of few days. So again, from the very basic essence, the buyers are trying to protect this area, the buyers are trying to protect this area, and finally there is a fall. When this area is breaking, the price tends to break from two different levels, from two different angles. Okay, one is the zone of the weekly chart or the zone of the longer time frame, if I may say, or one is the zone of the daily chart, of the short-term time frame. So what Sun Pharma does when it breaks these levels is that, logically speaking, technically speaking, we find that if the buyers who are protecting that area, they have been overrun by the sellers, it's quite obvious the price could trend more downwards. I'll show you the chart of Sun Pharma and show you that there was a very big move over here, and this is how it broke, and there's a very big move which came about over here, and this is a move in a matter of about 5 to 6 days from roughly around 695 levels all the way to 550. So that's about 450 point. 700 minus 550, 250 point, right? 250 point movement. So there is a big movement which has happened, and you need to understand this, that when the stock is influenced by the mass psychological tide of the daily chart, and then when it is influenced by the weekly chart, both at the same time, we are just seeing we are the inflection point where the two gears I spoke about, the smaller gear is moving the bigger gear. So smaller gear has gathered the firepower to finally move the bigger gear, because the smaller gear needs to move in a certain speed. So I influence the bigger gear. Are you all with me on this? Right? In between, if you feel like you have any questions, you can ask. I'm going very simple and nicely so that it's completely simple for all the beginners over here also. Okay. Now, how are basically the traders influenced? We talk about technical analysis being mass behavior, etc., etc. And I really want to ask one thing. How do people even say that technical analysis is without understanding what is influencing it? Technical analysis is the study of mass behavior on a price chart. But we need to understand what that essence is. Just like we need to understand the essence of every topic inside it. So, I tell everybody, the root of your own behavior and the root of how technical analysis behaves is the same. So suppose you are on the stock and you are on the long side in a stock and the price goes down. Every time it goes down, you feel a certain pain. It pulls back up, you feel a certain hope. When it's pulled back up, that pain has gone a little bit. So it gives new lows and then feel more pain until new lows don't happen. And there's a point of extreme where people come and they square off their positions finally because they have not put a stop loss, most of them. They are assuming that the price will turn around for them rather than against them. And all these little things put together, and I'm telling you, it's almost 10 years in this profession now. I have noticed, I met brokers, at my initial stage I met brokers, retail traders, professional traders, people who want to become professional traders. I have met a lot of college students and postgraduate students who have shown a lot of interest in trading, etc. I'm telling you one thing for sure, 10 years in profession, and one thing is clear, that people don't change. They remain the same. They remain the same, they don't change, they have the similar kind of habits, they repeatedly do the same things again and again. They're consistent in their nature of behavior, and because they're consistent in their nature of behavior, technical analysis tends to be consistent and give consistent results. People don't change when they're given a better option. They change when change is the only option. And that is when they hit their stop losses. That is when they sort of say that, I want to really change everything about how I trade. So the root cause of why traders lose money. The reason why traders lose money has got the secrets behind intraday trading, intraday movement. I'll tell you what the reason is. So I was reading this article in a country where a lot of accidents were happening. And these accidents were happening because of two animals in particular. One was a dog and the other was a donkey. Have you ever seen a dog cross a road? So there used to be this road and the dog would come, want to cross the road, and when he crosses the road, he would see from far ahead and say, "Arey baapre, car is coming, I need to go." Then he takes 2 steps forwards, then he takes 2 steps back because he sees the car. Then he realizes that the car is not really that far. Then he again takes 2 steps forward, then gets scared. So he is impulsively stepping forward, stepping backward, aage piche. And then finally there's an accident. This is how the dog behaves when he's crossing the road. A lot of traders in the market are impulsive in nature. They see a stock going a little up, let me buy. See a stock going a little down, let me sell. Impulsive nature, like how a dog behaves while he's crossing the road. And then there is a donkey. जो कि एक स्टॉक लेता है उस स्टॉक के लिए गधा बन जाता है. So either people are taking a small losses, a lot of small losses, acting impulsively, and they are just making big losses out of accumulation of small losses, or they're taking one loss and that is a very big loss. These are the two different reasons why people lose money and the pattern in which they lose money. How many of you agree with me? Can you raise your hands? How many of you agree with me over here? Welcome to those people who have just joined. We've done a bit of introduction. We are going ahead with the topic. Thank you. I have personally experienced the same thing too. And these were few of my introspections of what I've seen in myself and seen in a lot of other people happen. Traders lose money because they're actually either behaving impulsively or behaving in a manner in which they're not changing their decision. And this is a problem because how can decision making come if there is something called illusion of knowledge? One of the most important points in behavioral finance, it's called illusion of knowledge. They think they know, but doesn't really happen. Getting the point? What I'm trying to say? Now, what do you need in order to understand intraday trading from a rational point of view? I'm not talking about any emotional things, any bad, repetitive, negative behavioral patterns. For those, you can go into any of my trading psychology videos. You will find a lot on trading psychology, and believe me, you will relish it. There are a lot of videos on trading psychology also. So you can go there for that. But what is it that you need in order to trade well? Then trading generally stands on three different pillars, and these three pillars are very, very crucial. It is like having three legs of a stool. If you remove any of these legs, the stool cannot stand straight. And all of these are equally important. I cannot undermine the importance of anything. I can't overestimate the importance of anything. A technical setup, money management, and psychology. If you have these three things in place, you have got practically every grip on trading possible. You have got all the elements. You know, the world is around us is not that complicated. I always say this, you know, the lessons are simple. The student is complicated. So what I'm trying to say is simplify the areas you need to work on at these three levels. We're going to go into, after I explain this, I'm going to go into examples and show you how this turns out to be. You have to simplify things at three different levels. First is your technical analysis strategy. Now I just want to, I've put all the hands down. I want a raise of hands. How many of you trade over here without the knowledge of technical analysis or any kind of price strategy, price movement? How many of you trade here without any knowledge of trading, in technical analysis? Yeah. Somebody has just messaged me no audio. Don't worry, there is audio. Everybody else is listening. Maybe some computer issue from your side, because I get to know if there is no audio from my side. Raise your hands, those who believe, those who have no knowledge of technical analysis. Okay. So I've got like quite a handful of people raising their hands up. Now let me tell you one thing. If it is not technical analysis that you are following, either you're following the recommendation of other people, right? Or you're following the recommendation given through the news factors, right? These are the two things which are possible. So if you have recommendation, okay, if you have recommendation from a few people, please understand one thing clearly, that each one of those analysts who you would be following have their own trading style. They are not, no, and nobody is infallible. Everybody can go wrong at some point. What we're dealing over here are with probabilities. So if you're following someone, first of all, there's something called an execution gap. You see that the trade is coming, the triggers have come from that person's mouth or the person's posted it somewhere. And then you see that once that post has come, you immediately go to take the trade. You may or may not be able to get the same price. Also, as the price is trending, you may have a different time frame. The person who is posting it might have a different time frame. You may want to be a day trader who wants to close his position within the day, whereas he may be having a time frame of a positional trader. There are execution gaps because your psychological confidence on that trade is missing because you don't know the rationale behind the trade. And or you are influenced by your previous trade. So if the previous trade was a loss, you find yourself not taking this trade or taking it with a lot of underconfidence or getting out in small profits just so that you don't want to bear the pain more. And your hard-earned money. I mean, imagine the day you started making money, how much you worked hard for it, how much you perceived it. I'm not saying that you have to perceive money as only toiling and working like a bull, but really, it's your hard-earned money. And there is some level of work you will have to put around the leverage you want to take of the stock market. Number two, if you are looking at news factors, how many of you believe that you can trade intraday using the news factors only? Please raise your hand if you believe that. How many of you really think that you can trade only on the basis of news factors? Only very few people. Only very few people. Now with the news, again, and the reason why I'm telling this because, obviously we're going to come to charts and everything, but we don't even understand many times. We don't even understand many times that the news, okay, is how disadvantageous it can be for a short-term trader. In the words of Mark Douglas, he quoted this, right? Fundamental analysis creates something called a reality gap. Means, for example, if I say that monsoons are very, very good. So monsoons are very good if that news has come about or predicted to be very good. Can I say Nifty will go 20 points higher tomorrow, or 50 points higher tomorrow, or 30 points higher tomorrow, 200 points higher tomorrow? I cannot. I cannot translate the move of the stock price, the movement, or quantify the movement by looking at the news. It is a subjective measurement. There will be many people in the market who would say, okay, I think this should be like this, and there will be many people who would be saying the opposite. In the recent past, we saw a lot of batting, around the names on the auto sector. Around the names of the auto sector, auto sales are going down, this is happening, that is happening, completely on the basis of news. And what happened? In a few days from when the news has started, the automobile sector stocks have gone for possibly even to some extent higher than that. So there is a reality gap. What news was there was valid for any fundamental analyst, but that holds true in the long term. And that holds true with a lot of other factors. Suppose if a company like Eicher Motors or a Bajaj Auto, or if I take up a number, okay, I'm just giving you an example, okay. So if I say the company X is the highest market share in this and this auto sector, in this and this space, he or that company will still remain at highest market share. The news is an additional factor that auto sales overall are going down. So there are other factors, fundamental factors that impact in the long term. And this impact shows in the price in the long term. That is the assumption of fundamental analysis. So if you are taking the tools of fundamental analysis like news, you also must understand the assumptions of fundamental analysis, right? The assumptions of fundamental analysis and the assumption of technical analysis are different. Okay, I'm going to quickly, just put this slide for those who want to make notes, those who want to, understand this. That we are not looking at just information when we are day trading or when we are speculating. And whatever I say also stands for short-term trading, not just day trading. Okay. We have to understand the markets can be information-wise efficient. That means whatever information is out there, the market can absorb it and take it inside. Okay. Investors are here to make decisions, uh, solely based on risk return. So this is another assumption of fundamental analysis, that people are here to take risk return basis and they are very rational. But truly tell me, are people more emotional? And I want answers from people. Do you think people are more rational or people are more emotional while taking decisions in the stock market? How many of you really think? You can type in the question box. Rational or emotional? It is emotional, right? At least in the short term, we can say it is completely emotional. Intraday, it is 100% emotional, almost. I would say people are emotionally taking these trades. Thank you all for the answers. So the very definition or the very assumption of fundamental analysis, the fact that investors behave rationally, okay, is not true. Also, they cannot buy or sell without limit. And there is not a perfect competition. Sometimes prices go more than they should, up or down. They go higher than they should have gone higher, they go lower than they should have gone lower. Right? So these are the fundamental analysis assumption. Not putting too much time here, let's come to the simpler format of what we need to focus on. The technical analysis assumption. The first is market discounts everything. Now over here, when they say market discounts everything, it depends on the perspective of the people, not just about the news. The perception of the people, the future expectations, those are discounted. So for example, Modi ji became the prime minister in 2014 for the first time. But the market started rallying a little before that. Why? Because what is perceived? Perceived a change in the government would be very healthy. And there's a high chance of Modi ji coming. So the market is speculating on the fact of future expectations. So the market has started to discount everything. And it may be on the basis of news or maybe on the basis of perception of some other factor. Okay. But the truth is that the market discounts everything. That is the assumption of technical analysis. The other assumption is that price moves within trends and the trends have trends within them, which is also true. We can't see everything going just up one side or down one side. Okay. The next is market participants act on emotions. We know that there are emotional patterns. As I said, go to the trading psychology video to understand these emotional patterns, etc. And you will get to know a lot about that. But these emotional patterns, people tend to have repetitive, and what I have personally experienced when I started teaching, and that is why I have included a lot of trading psychology in between when I have my classes. I talk about it because when I started to teach people, I really felt that they do need a lot of strategy-based learning. They do need a lot of technical analysis, but they also need a lot of learning of themselves, a learning of the trading psychology. This is one of my biggest realizations. As much as it looks from outside, people don't need it, they need it even more. Anyway, the assumption of technical analysis is that they act on emotions and history repeats itself. So when it comes to intraday trading or short-term trading or short-term price movement, fundamental analysis cannot give you a stop loss. It cannot give you a target price. It cannot give you an entry price. Whereas technical analysis does that. So basically as a technical trader, what my job is, okay, my job is to look for those spaces where, when I'm looking at bombastic moves and I'm looking at reliable, strong moves and trends, look for those spaces, learn to identify those spaces, and regardless of news or no news, if I have made something, out of this consistently, I have given a proof to myself that yes, we are in here for the long haul, right? Excuse me, right? Now what I'm going to show you before we get into strategy, I'm going to show you a few examples of big moves where the news as well as the price came together and it was technically extremely valid. I don't even need to say this. You can go on this particular date on my Telegram channel when I have shared the idea. On this date I have shared the idea. This date. Okay. I have shared the idea on Maruti as a short-term positional thing on the short side. On this date and this date, probably either of these two dates I have shared. Okay. There was, and I'm going to, again, this is very simple, nothing too complicated. We are going to get into complicated indicators, etc. a little later, but let me show you from simple point of view so you can capture the essence. There are certain buyers over here. Buyers are trying to protect this area, just like the Sunfarm example we saw. This is something else. This is not that buyers are trying to protect. This is something else. This we teach in the course in the first class. Right now, not getting into the details. Okay. So we have got a lot of strong hands trying to protect this area, and there is the bears who have overwhelmed. Now bears have become stronger. Bears have overwhelmed and they've become stronger. And this is happening, and this arrow is the news day. This big movement is happening on the news day. Quarterly results. Right after 2 to 3 days, there's a big movement on Maruti. We reiterated the recommendation that now the part of the move has come where this has move had started. The part of the move has come where there is going to be a big move within the day. A big move is happening within the day. So basically, just like the big gears are moving the small gears, the smaller gears move the big gears, they gather the steam to move the big gears. The big gears influence the small gears as well. The parts where the biggest part of the movement is in an overall trend, the overall trend is from here to here. But one of the strongest part of the movement is over here. If I am day trading and I want big decent moves, I need to identify this. Okay. I personally believe there is no point doing any kind of trading until you don't have a decent move, a decent sizable move. Because what happens, although you might have to be flexible sometimes if the price is moving sideways or something, but in most cases, your outlook and your reach should be towards the fact that even if it is intraday, I want a big move. You're risking your money. There's no point doing it for a small move. That's personally what I believe. Okay. And it's a very important part of the skill of trading. I'm not saying that you will get every bit of this in intraday. As an intraday trader, I'm not talking about this day in particular, but in such a situation, if I can get 1/3 of it, I'll be more than happy. But in a smaller day candle, the entire candle may be 1/3 of it. So I'm just trying to say, big moves means something which is reliable over here. Okay? Something which is reliable, high probability plus big. This is happening hand in hand with the news. And as we can see, there's an increased spike in volume as the break is happening of this level. That means there is a higher participation. This is Reliance quarterly results. And there was a symmetrical triangle pattern. For those who don't know symmetrical triangle pattern or how to identify it, don't worry. Just understand that there was a technical breakout, a technical signal to buy over here. Again, this logically shows us higher volumes, a spike in volumes after a phase of low volumes and lackluster market. So movement has begun, and on this day is the quarterly result. Okay, so the quarterly result day is happening right 2 days after the technical breakout is happening, where there's another technical breakout on the day itself or the end of the day, you can say, right? So you just understand what I'm trying to say, these different factors and how they're beautifully coming together. And these are those days, those few days, okay? Okay, no. This is why I'm giving this example, Mr. Murtuza, is because not just because on news only these big movements happen, but I'm trying to say that even if you don't know the news is happening, you can still find it technically. And as I was saying, that since there are many other moves which happen, which are big without a news trigger, the many other moves happen which happen without a news trigger. The steel stocks have started showing strength in the last 3 days. There was no news behind it, but there is a technical trigger. So this is on daily basis in Nifty, you can see 200-point movement down up. How much has the news on economy happened? Right? So this is how it is. Hi Mr. Vijay, please continue with us. We have started some time back. Okay. I'm trying to show that there is an alignment which happened even before. The news may have happened this day, but the technical trigger happened this day. And there was a big part of the move on this day itself, later itself, etc. Okay. Infosys. All these are recent examples. You can see 2019. This one though is 2019. Just few days back, few months back, July, around July. Oh, sorry, not July. A little before July. You can see this. Technical trigger had come over here, and the next day the price moves. Now, on intraday basis, there are certain things to be followed over here. Right after the gap up has happened, we're going to also discuss gaps. The same thing in case of Infosys on the daily chart. What did I say? Let's understand the two time frames. Before this, what I showed was the Infosys hourly chart. This is the hourly chart. Okay. There's a range breakout. There's certain candlestick patterns. Again, there's a volume spike. You can see. I'm not getting into too much complicated things, but you can easily understand, right? And the follow through happened. This is the same thing on the daily chart. What is happening in the daily chart? This circle was the one which you just saw. And again you see that the price is gapped up over here, it shows. Mr. who is, one second. The first thing is Mr. Shub, I can't pronounce the name. Mr. Shubhaji is saying, sir, is this basic level or pro? Mr. Shubhaji, if you are a pro, you will not ask this question, and I will tell you one thing. A pro is someone who knows the basics very, very well. So it is there for the pro. I'm not making it too complicated because we have got a huge audience, okay? And we need to understand certain things before that audience can emulate and dig deeper with it. Are you getting my point? So this is another example from my Elliott wave theory perspective. Now, first of all, those people who talk about Fibonacci, I don't believe in Fibonacci without a proper wave structure. Fibonacci, drawing them blindly doesn't make sense. So what I've done is that, one second, I'm getting some questions. I'll just open what is the questions around. I have watched all your videos, sir. It is so much useful. Thank you, Mr. Vijay. Mr. Murtuza says an indicator tool which can help us understand stock will give more even if there is no news in the stock. Okay. No, the entire science is about the entire understanding of technical analysis is about news or no news. It is giving us a movement. Now look at this Elliott wave theory example. Okay. Regardless of the fact that there was a news or not. This is wave 1, this is wave 2. Now these are the bigger time frame waves. Now what I am doing, the wave 1 is splitting into 5 waves. What are the 5 waves wave 1 is splitting into? 1, 2, 3, 4, 5. You can see the Roman number is here, right? And within this, wave 1 is splitting into 5, which is called an extended wave. So this was a reading with different types of sub waves, right? different type of sub waves. This was the reading, okay? And after this reading, this is 2014, okay? 2014. I mean, this is end of 2013, and then later, second half of it is 2014. What happens right after that? After wave 1 is completed and the wave 1 correction of 2 is completed, we will see what is happening right after that. This is the Nifty chart. Removed everything, making it clear. Remove maximum things. And this is the 1 second. No. Yeah. 1 second, please. 1 second, please. 1 second, please. Manager. Okay. 1 minute, please, guys. Just hold on, please. This is 2014. So the exact picture which I was showing to you of those wave counts were happening somewhere over here. Those wave counts which I was showing you were happening somewhere over here. And after this, what has happened is a huge move coming as a wave 3. And within this, it has its own subwaves. It is its own style of moving. There's deeper analysis into that. Okay. So reason for giving you an example was this, that I don't even that time even the expectation of who would become the prime minister is not there. But the wave formation has started in the previous year 2013 August September. From there it has started. Right. So there is a lot of room for movement regardless of the fact that there is news or no news. Or what news? Okay, Tarang is asking, in Reliance we can see a symmetrical triangle, or buy after symmetrical triangle breakout or the second breakout. Now Tarang, the whole thing is that it's simple, it's simple. The whole thing is there are different time frames, different kind of entries. Both these entries in this case are valid. In case of Reliance, both the entries are valid, and there is a follow through after that also. We are particularly trading intraday. Then there are certain days on which the better moves are to be taken. And yes, you are right that way. Both are valid. Okay. Okay, Mr. Vijay Joshi had asked, but still in trading psychology, I'm not able to change. So any suggestions? Okay. So Mr. Vijay Joshi, what I would say is you could join the course in which I do the flagship course, the technically sorted course. But other than that, if you want to have another understanding of trading psychology, you can call me personally. We are having some other initiatives also. To start with, see all the videos on trading psychology. Now, once we are done with this example, now understanding one of the key concepts of a day, let's break the day, intraday into a few, this thing. Okay. Mr. Vijay, you can aram se set up a call with me, ask my team, they will set up a call, we'll talk on the phone, not an issue. Okay. One of the key factors in understanding intraday trading is understanding the time of the day and how the day starts, etc. We all know there's a pre-open. And when the pre-open is there, where is most of our attention? Where is most of our attention going to? When the pre-open is there, where is most of our attention going to? Whether the stock is going to have a strong up or down close. It's going to be a strong up or down close, right? That is where our attention is going to. when we see these gaps, and when we see these gaps, we need to understand which gaps are trustworthy. When there is a gap up, for example, you need to understand, is this gap up worth taking the risk? Is this gap up, which I see on the daily chart, so big? Okay, that means the price has gapped up, opened over here, and then within the day it has gone and made this high. So if this is a gap up on a stock already at this level, is it really worth taking a risk to go long and capture this movement? Because on a gap day, these things are filled with high volumes, filled with crazy possibilities, right? And you see this area on the hourly chart. I've made this. This is the hourly chart, not the daily chart. This every candle is 1 hour. Okay. This is the hourly chart. On the hourly chart, you can see that there is a huge gap. So what are the factors that can tell me if there's a strong gap happening or not? If there's a strong gap happening or not. This is what a technical analyst would see, a technical trader would see. Now, as someone who really believes in the fact that, okay, you need to go through a certain filtering before getting into any conclusion, my personal filtering happened on two levels. One is the indicator level, the other is the volume level. Okay. So the first thing which I saw while the price had recently shown us an up move, okay, that there was a high volume candle with a completely green bar. So at the volume level, because volume is the only indicator that is independent of the price. All other indicators are calculated from the price. Volume is the only indicator which is not calculated from the price. Volume and open interest. Okay. So I saw a big green candle with the highest volume in the recent past, and it is showing to me that there is some firepower over here. I don't know how it is going to unfold as yet, but I know that there is some firepower over here. Okay. Then the next thing which I was saying was my way of looking at RSI. Now, okay, now for this I'll need to remove this particular marking and show you a larger picture. Okay. My way of looking at RSI. Now, what I'm seeing is that first of all, there are certain divergences which are present. That means that the price is making continuously lower low, but the RSI has not been able to make lower low. So in the recent past, we have seen the price has slowed down in its downfall. Slowed down in its downfall. Then if I put Bollinger Band analysis, the the close above the upper band after hanging around in the mean, or if I put the multiple time frame moving average analysis, which got me into understanding that the price has expanded on the upside. All of that, and there is no price structure analysis over here except for one trend line which is there. It could have been a more reliable trend line, but there is a trend line over here. Could have been a more reliable one if it followed more rules, but yes, to some extent, there is a firepower in every case. So when there is a reliability on the previous day, I've done my homework, and the next day morning I've seen the pre-market after doing my homework. Now I'm putting this chart and making it a 15-minute chart, okay? So the 15-minute chart, let's come to the same space. On the 15-minute chart, I get to understand which level to buy into. So I wait for the 15-minute candle. I see some consolidation happen at 168, and around 10:15 I go long. At 12:70 I get immediate move of 35 rupees on the stock. For somebody who is a more professional, they can look at the 5-minute chart also. Why? Because in the morning hours there's so much activity that the 5-minute chart can turn out to be reliable to some extent. So there's a bullish green hold line, belt hold line with high volumes. Again we get volume confirmation and we can go long over here. I'm just purely talking intraday trading in a safe way. But what happens, the retail traders generally think, oh, stock has opened 5-7% higher. Why do I go long? How can I trade this? A few of the students traded Yes Bank recently. Yes Bank, this is the 15-minute chart of Yes Bank. Now on the daily chart, the Yes Bank is not showing so much of a bullish trend. On the hourly chart, there was a cup and handle breakout. And the cup and handle pattern breakout led to a movement. Okay, if I show you the hourly chart, it looks like this. Now this breakout move, which is really moving and breaking above and moving and sort of opening above the previous resistance levels, they had very attractive structures. Again, the RSI range was broken, which was, this is the RSI range. Okay, this is the 60 zone. Ignore this dotted line. The 60 zone is my RSI range upper band. It was broken. At the same time, on the 15-minute chart, I can see that there is a consolidation over here and there's a breakout again. Okay, not getting into very specifics. This is the RSI, Mr. Sai. This is the RSI. Okay. So when you have a gap in the morning, there is a way to trade the gap. Now there are different types of gaps, and I will tell you that it is not necessary that if there is a gap up you have to buy, if there is a gap down you have to sell. It can be the opposite also. Okay. But there are certain gaps which are called breakout gaps. There are certain gaps called common gaps. There are certain gaps called exhaustion gaps. There are certain gaps called runaway gaps. Now obviously, here our focus will be on two: exhaustion gaps and breakout gaps. The common gaps you have to ignore. The common gaps you have to ignore. First understand, like when we do gaps in our course, I do all these types of gaps in details. When we take examples of that, what I tell students is common gaps are something which will be there. Learn to ignore them. Don't be biased on the stock while you're trading it. Because you think that the stock is gapping up by 2 rupees, it's a 1,000 rupee stock. You want to jump into the top thinking it is a reliable gap, don't do that. Find the factors of reliability and a breakout gap according to the volatility of the stock. According to the volatility of the stock, the breakout gap is going to be significant gap up or down. So Yes Bank, if it has a certain volatility, at least 2 to 3% gap up, gap down I would require to consider it as a gap. If there is a 1% gap up, gap down or 0.5, 0.7% gap up, gap down on Yes Bank, I will probably not even consider. So that significance should be there. Okay. Okay, Mr. Sai, this is the 9 EMA. It's not that I use it, it is by default. So you can make it 1 and you can, just RSI is RSI. And reading the indicator is more important than what I would be having on my screen. Okay. So I don't use that 9 EMA. I use RSI default 14. And sometimes I have certain modifications. And for that we'll have to go in details about RSI. Okay. So I'm just keeping it till here. But again, we saw certain, gap examples which were good for only scalping, but not for a proper way of doing it. Now, a lot of people were asking me recently, what made me choose Hindalco? What made me choose Hindalco? Okay. A lot of people were asking me what made me choose Hindalco. So what I'm trying to say is that when we have seen a particular breakout has happened and it has not lasted, it doesn't mean that it is just a false breakout. Okay. False breakout is for you and me. False breakout is for people who are thinking that possibly the market should follow through. But the market does not move in squares and boxes. The market moves in waves. And this is something which we have difficulty in understanding. Why? Because there are too many screenshots out there of charts people have made when they make a line and then they show a breakout and they put an arrow like this. And the moment they make an arrow like this, everybody thinks it's going to go in one line like this. It doesn't happen like that. Okay. So recent gap in Dalco, there was a scalping opportunity. 15-minute chart. If you see the gap to be reliable, you can scalp out, put a trailing stop loss, if you have not scalped out the profits, but you can use it in scalping. I'm just trying to show in the beginning of the day how an intraday trader can use his scalping ability. You can use your scalping ability in the beginning of the day. I'm not saying go for 5 points on Nifty or go for 50 paisa on Hindalco. Go for something significant. Go for something reliable. How many of you over here know what scalping is? Please raise your hands if you know what scalping is. Okay, only few people know. Okay, scalping means basically to get in and get out at good speed and having the skill to book profits immediately when the spike comes, and it's a smaller time frame thing, it's an intraday thing sometimes. So a scalper would be someone who goes short over here at 177.8 or cover at 176. Something probably even smaller than that would suit him. That's what a scalper does basically. In this case, the scalping would happen over here. There's a 10-minute chart you can see. Probably you can go in at 183, get out at 185. So when there are reliable gaps, you can use them as scalping opportunities. Okay. Scalping requires a certain skill set. Some of my students do good scalping because that suits their personality and that suits them. You know, they've done it before. There's nothing wrong with it, and they're consistent in what they're doing. So when I psychologically train these students, I tell them about the aspect of acting aggressively, reacting to the price, acting in a way where there's a controlled impulse. You can't be too impulsive. There needs to be a controlled impulse. So that comes under the periphery of scalping. For those who can keep that control, can take that leverage and go unbiased way, for them it is good. But all my students don't do that. A lot of my students also do intraday trading or short-term positional trading. So it's a lot related to your personality, how you want to place yourself intraday. Some people ask me, sir, what best time to trade? So I remember recollecting a period of time when I used to only sit in the market after 11 o'clock or 10:30. So what I would do is I would come to office at 10:30 and for half an hour I would study what has happened till now. And that has been a great phase of trading. I did that continuously for 6 months. I never had a problem. I did not, because what happened is in that particular phase, just before that, the morning volatility used to make me feel a lot of emotions. And everybody has their learning stages. That was mine. I saw that learning stage as something to place myself psychologically different, because if I'm habituated to the morning moves and if I'm not comfortable there, then it is better then I come a little later. So at least I make my comfort zone better with market. And then now I sit all day. That's a different thing. All right. So when there are gaps, essential part of intraday trading if you have gaps. Now the question around gaps very common is, are gaps covered? Do gaps get covered? So let me tell you one thing, there is no such philosophy which is that gap should get covered immediately or later. There is no such philosophy like that. Okay. And if you want to trade a gap on the opposite direction, okay, how do we perceive it? How do we perceive it? Let's understand that. When will gaps get covered? Please understand this very, very important notion what I'm trying to say. Just when I said that if there's a breakout gap, this is the 15-minute chart of Bank Nifty. If there's a breakout gap, okay, that is coming through a proper structure and is giving me certain sizable things according to that price structure, then what happens is that the gap becomes reliable. But if there is no proper structure, the gap becomes less reliable. Okay, Mr. Murtuza is asking, how do we see, how do we identify movement through option chain like we do on index? Okay, Mr. Murtuza, what happens is on option chain, when we look into option chain, and for that I would recommend you to see the last 5-6 videos on my YouTube channel, which is a 5-day series. Recommend everyone that. the spoken about option chain, it's not a everyday thing, it's an occasional thing. Okay, so you don't do it just because you have to do it for the reason of prediction. It is a part of overall analysis which can be used when you have got something. It is just like saying that a particular company may have a commodity link or not. Some have, some don't. So the phase of the market which shows that it has, it doesn't, then you have to decide. Okay, so you have to learn how to do that first. In a short span of time, it's not possible. And for me to go into details with the examples, but definitely I can say if you are joining the course, we can sit there and do that when I teach options. Okay. Rahul is asking, sir, as you said, market moves in waves. Then how to keep stop loss? Good question. Good question. Okay. Now, I'll come to that, Rahul, in a bit. So the stop loss will be coming to. Right now, let's just complete that example of a gap which is getting covered. Now, when a gap is covered, it does not mean that there is some sort of a rule that gap will be covered or this or that, or there is a compulsion. It is just that those breakout gaps which have got strong structure, on the breakout gap, okay, which have got strong structure, they tend to last. So if there's having a strong structure beneath it, it would tend to last and probably increase from here. But because this vacuum need to, why is this vacuum getting filled? Because it wants to collect more density of buyers and sellers, and it's just that, suppose you are like, okay, you go to a party, okay, and then you suddenly remember while going down the stairs, while leaving your home, you forgot your keys. It's something like that. That it just wants to come back and have a more clarification. That you need to go and check, okay, is my door locked correctly? Like that. So the density of buyers and sellers from which the movement has propelled is not a very strong movement. And if it over exceeds the structure, then these kind of gap get covered. For that, all you need to do is keep a stop loss, make an assumption that this gap will be there. It's an aggressive trade, but if you go short, you will make money. The same thing happened yesterday with Apollo Hospital, as in this Friday with Apollo Hospital. Apollo Hospital chart, look at this. Gap over exceeding the structure. Now, the structure has its own importance. I'm not saying that. Whatever the structure is, no matter how small. But when it over exceeds it, generally I've seen the gaps get covered on that note. And the entire gap zone is a very important zone. From entire this to this, right? So in this case, again, you see a downward movement follow through after this movement. On the hourly chart, also it's pretty visible. And if you want to take an entry right after the first 15-minute candle, or if you want to take an entry after the right 30-minute candle, regardless of that, or even the 5-minute candle of the 1-minute candle, that's not my point. Covering gaps, trading the covering gaps is an aggressive trade. Need to keep a tight stop loss. At least keep a stop loss in the system. Tight or not, I don't know. You keep a stop loss. Even after the 15-minute candle, if you choose an opportunity to enter around 1508, 1510, 1512, or 1503, whatever area, the low of the day, the lower part has gone to 1400, and so there's a 70 rupee follow. No, there is no such percentage. It is a set of assumption, Imran. It is a set of assumption. Okay? Because you're looking at the morning markets. I understand the value of putting a stop loss, planning the trade, this, that. But when you have to decide something in 5 minutes, we have to be practical here. No matter how good you may be in learning or how good I may be in teaching you. But the decision needs to be made in 5 minutes. A 5-minute decision is an aggressive decision and totally against the trend, right? So that is an aggressive trade. So the probability of the aggressive trade can be judged by, so just like the probability of how the gap would continue on that same direction of the gap. Continue on the same direction of the gap. Similarly, the opposite is required is when it will not continue, it will exhaust. Okay. Mr. Sai Prasad is asking, do technical analysis every day is a good idea? Trade in same stocks every day is workable? No, no. You take a set of stocks. You take a universe. You don't take the same stock every day. Every day is not giving a similar kind of moves or even a move. Right? Right? That's not the thing. Okay, Murtuza ji is asking, example 1500 major call writers are available to how we define that they are sellers or buyers who made a position at that level. Well, personally speaking, Murtuza ji, I don't look at open interest like that. Regardless, especially you're looking at Apollo Hospital, okay? I mean, I don't even trust the liquidity of open interest over here. Any open interest data will also come to me a little later, okay? Because depending on where I'm seeing the data, okay? And if I have to see data raw, it's very difficult to comprehend immediately. If I see the option chain, it'll get updated after 5 minutes, 2 minutes, whatever. In the morning, I don't rely on these things because people are taking position the first 10, 15 minutes, first 1 hour of the morning. So I would not rely on any kind of open interest analysis over here. There was someone who asked, I forgot the name, someone who asked, do we do open interest analysis for intraday? You can do any analysis for any time frame, but you can't do one analysis and expect yourself to make money. Always a set of tools put together helps you in understanding which is the high probability setup. You can't do it just now. That is one thing which is always going to be this thing. I'm getting a few more questions. So Mr. Sai Prasad, I hope I've answered you clearly. I would really say you've shown a lot of amazing interest, and that is something with patience to learn you have shown. I would highly recommend you join the course. Your questions are also very intriguing. Okay. So I hope I've answered you correctly. And what happens is that you do your homework. Okay, someone just asking how to scan stock for next day before market open. How do you identify stock specific like move significantly in no time like hospital, tech Mahindra, but does it okay, 1 second. How do you identify stocks that move significantly in no time like Apollo? Okay. Mr. Jitendra, number one, you keep a watch list. Number two, so you watch list the universe of stocks. Okay. Number two, I do have certain, use of technologies now become important. I mean, I'm not saying that you will have to make something very sophisticated, but I don't think something at a retail level. I mean, if you join the course and if I show you on this software, then there are many kind of scanners which can be made. Regardless of what software you use, everything has its own way of getting done. Okay, but what I'm trying to say is, at the very basic retail trader level, I can at least tell you can see your top gainers and top losers. In the morning, you would definitely see now Apollo Hospital and top gainers. Now, what is happening is after you see the chart, and the previous night, if it is seen, if I see the charts in previous night, as a day trader and a position trader short term, what I personally believe is that it is not the only input. Okay. Now, on X number of days, on X number of stocks, I will see things that I can plan previous day and do it. So I recommend it even to those students who don't sit with the markets live, who have another job to go to, and then they want to plan it. And I say trade less frequently because you will not get high probability trades like that all the time. And the other is live markets analysis is very important. Hello. Extremely sorry for the small glitch. So I just changed my internet network. Maybe due to the monsoon, the internet went a little haywire. I hope everyone can hear me now. Okay. Thank you. Thank you. So there were certain questions I was answering. One or two people I think became a bit impatient and have left, but take it, chalega, no problem. I think they'll come back. They're rejoining. So really sorry. What we were talking about and what was the next question in line? There are certain questions which have come right after that. So Mr. Jitendra, as I said, there will be certain aspects where a live analysis will be more important, give more weightage to what happened in the last 2 hours rather than what happened in the last 2 days. Sometimes that can happen. Especially as an intraday trader, your live analysis is as important as your preparation. And you will be in the end only as good as how you are prepared, not just with your homework preparation, but also with your, with your preparation as a trader, with the flexibility and seeing the live analysis as your skill developed as a trader. Can I predict the day by opening candle pattern where it goes boost or loss? Now, you can't predict the day with just the opening candle. Maybe you can find some commonalities. But trust me, there will be, like for example, I gave you just now an example. I mean, you have an opening candle or Apollo Hospital. The day opened, went down, the first candle was big red and it went down completely. And then you have a candle in Bank Nifty, the same kind of candle in Bank Nifty. But the opposite of it happened. The price opened, gapped up, opened, went down, but it completely went reverse the other day. So, if somebody is out there, written it somewhere or made a video on it, the opening candles is sab kuch hoga, I personally find it really bullshit because it's not so simple. You can't use just one IC. You can have very strong evidences out of one concept, but you can't use one concept. You can't use one concept and make consistent money because each, I mean, you can make consistent money, but your probabilities of doing it will be very low, very, very low. Instead, use a group or set of variables, mix them together, and then understand how to make consistent. Are you getting my point? What I'm trying to say, right? That's the aspect. Okay, I have some more questions which are coming, and you can shoot questions, guys. No problem. You can shoot questions. Okay. Okay, sure. Thank you. Okay. Thank you very much. Thank you for the thank you messages. Okay. So Rahul, I think you were asked then to get view with the help of open interest. Rahul, open interest with when it comes to just open interest. Okay, if you want to know about that, as I said, go to last 5-6 videos. I've spoken about it repeatedly. But as far as intraday is concerned, which is our topic today centered around, open interest can be useful when seen in only extreme conditions. Open interest by itself makes no sense in using, say for example, in the very average conditions where there's a balance between the calls and puts. So if people are thinking that there is some way of doing it on everyday basis, I'm sorry, there's not. A few days in the month, a day or two in the week, yes. And for that you need to learn the nitty-gritties of options, of understanding what the different aspects of options are, the Greeks are, how they move, how they're calculated, and then understand how in tandem with the time of the month it is behaving. Then understand it's a contrarian indicator in the end. Then understand whether there is more weightage significantly towards one side. Average difference will not work. Significant difference needs to be there on both the sides. Then you will know the stronger hands, the buyers or the sellers or of the particular stock on which the options are being traded. Right. Hitesh is asking a good question. He says, what is the best trading strategy for an office going person? I have time from market from 9 a.m. to 10 a.m. Okay, Hitesh ji, very good question. I would say the two best things you can do. 9 a.m. to 10 a.m. you have. First of all, that becomes 9:15 to 10. Okay. Second is, since you are office going person, can't really see the markets, then you learn how to trade by doing your homework and taking those few good trades which don't happen every day or don't may give you the follow through every day. So do it few days a week. Take those positional trades and go for bigger moves. Because from 9 to 10 a.m., if you want to sit every day and catch out something small, it might be a little difficult for you to execute and keep your head in the game with. On the other hand, if you want to do that scalping kind of thing, please feel welcome. Again, you can learn from me and you can understand how to do that as well. So sit in the markets and understand the tone and see if you can get something in the first hour. If not, then you can also choose to do that positional thing which I said on short term, which will lead to giving you bigger moves. But then you will have to monitor your trade to a little bit extent during your office hours. Am I clear, Mr. Hitesh? Right. So now I'm going to do is I'm going to change the chart setting a little bit. Going to add intraday vertical lines. Yeah. So do you teach scanners in the course? I teach a lot of things in the course, including how you would reach to the scanners. And I show you some things, but I encourage students to make their own scanners. How to do it, I show you, yes. Yeah, this is why it is not possible showing it over here, simply because it's a very detailed understanding of the indicator which you need. So if I have a scan on the basis of certain indicator, I first need to understand that indicator intimately, right? Then it works out. Okay. The next thing is, so there are different phases of the market in different time frames. One of the key things which I have understood is that the previous day high or low becomes a key point for the next day when there is a trending market. So the very definition of a trending market, say let's take this high for example, okay. The very definition of the trending market would mean that this particular high, okay, from here there is a short-term downtrend. Perfect, not an issue. Short-term downtrend. If I see this on the daily chart on the 19th of this month, sorry, 19th of August, okay, and then I see a small candle over here and then the follow through. Now what I personally believe is that when we are seeing such things happen, we see that the trend is in one direction, but the volatility has curved. So if I talk about the previous day low, when a strong trend in the middle of that, yes, immediately first candle will take the previous day low. But when the price has spent some time in the previous day low, then I will understand that is an important zone. And if it breaks the next day, then it is very important. Okay. So my personal analysis, if there is a time at the previous day high or the previous day low, time spent, use that as a very good mechanism to set up a trade. Like if there's time spent over here, regardless of the price, the fact that price went over here, if there was time spent, you will get something. Now it seems a little small because I'm showing it to you on the hourly chart, but if you will get that something as a immediate thrust, that is 28,183 to a high of 8,592. So that's a 400 point move, and there is something you can grab from there, right? It's not just completely off the bucket, right? Similarly over here, once the break happens, you get that immediate thrust, 27,833, and in the next day morning itself is 27,485. So another 400 like that. Okay. So when there is a lot of time spent in a certain area and that becomes the previous day's high or low, okay, it becomes a significant point. This is my personal analysis and research along with all the authors and the beer books and the best course in the world I've read from. Okay, another take one like this. There's a lot of time spent over here. Now, there's a lot of time spent on this high. But the next day, what happens? Okay, the time spent over here, next day, immediately as the price goes above it, you go long and let it go. You follow the trend to a certain extent. Depending on the phase of the market, the trend will be there. We're talking about small time frames here. So we talk about modest targets, right? The level of time which is spent. This also happened in intraday. This doesn't happen in the previous day next day, but even this was a follow through. Okay. So the kind of time which is spent, if there is a flat area, a horizontal area, then you look for the next day. And then you look for the break. Okay. Okay. How can we see or set support and resistance? Okay, Mr. Shubha Gari, okay, I'm sorry if I didn't pronounce your name. I'll call you Mr. Dinesh Sai. Okay, so Mr. Sai Dinesh, what happens is that when we are looking at support resistance, you set your support resistance according to the rules. Okay. Now, this is, this becomes a little good question from your angle and becomes a pro thing from, most people don't realize that they need to know how to do it. Well, in the very first session of my course, I teach people how to set these rules. Okay. In a nutshell, what I will tell you is that, of course, you can definitely join my course, etc. In the nutshell, what I'll tell you is just go through some of my videos and see the examples which I've used. See the examples I've used. Go to some of my live session videos, etc. where I've talked about support resistance. Because you see, if price structure comes from patterns, the patterns is made up of support resistances and the trend lines. So there are rules to the trend lines, there are rules to it. If you go and see some examples, your idea will get better. Okay. Are you getting my point, Mr. Shubha? Mr. Dinesh Sai? Okay. Thank you. So again, Mr. Hitesh's question is answered. Tarang is asking, could you please brief about RSI respect to time in 15 minutes, 60 minutes, hourly, daily? Okay. Tarang, very good question. But the RSI thing which I want to tell you is that RSI is mostly misunderstood by people. Generally, people are talking about a 70 or 30 line of border where there is overbought or oversold signals. But there is no such overbought or oversold signal. Nothing is overbought or oversold. But if you are asking me in a nutshell about how to do two time frames on RSI, what I would suggest you is that you take, like for example, I take the chart of Tata LXC, right? I see an extremely good breakout over here. And when I see a extremely heavy oversold signal, for me that is a mouth-watering area to go short, mouth-watering area, because here I'm extremely oversold. So the RSI has come down below 20, below everything, come down to 11. So the immediate settlement of price this is the shorter time frame, right? The immediate settlement of price towards anything around 40 or around 50 will be my go-to place in this case. But the same thing, if it is not that deep a correction, and if I see that there is a extremely bad oversold signal, so anything up to 60 or 50 will be my place to look for, the place to see again the price turn down. Okay. So how extreme that condition is, then matching it up with the different time frame. And firstly, being clear about the range of RSI. 70-30 is not the range of RSI. First, be clear about the range of RSI. Okay. Yesterday only I was teaching these students RSI. So you have to be clear about the range, and none of these range is like a patthar ki lakir. It is not a hard and fast rule. It's a subjective way of looking at it. I hope I've answered you, Tarak. Right. So you compare the multiple time frames, but you do it in different conditions in different ways. Right? Okay, Hitesh ji is asking again about ORB strategy. So ORB strategy is the opening range breakout strategy. Okay. Opening range breakout strategy, quite well known name in case of in case of intraday trading. So let me take up something which sounds or seems like that. Opening range breakout. Okay. So let's take it like this. Take the bank nifty example perhaps. So the point is, when the market has opened, okay, and right after the open, there is a range bound movement. Now we see two examples over here in this case. And right after the market has opened, now this was anyway my second point, the ORB setups was anyway my second topic of discussion. So good question anyway. So right after the market has opened, there is a certain movement which is completely sideways. Now this goes to show to us, and many times it happens after a strong up move or a strong down move. This actually goes to show to us that you see that the price, there's a difference, okay, in the price movement in the next day. The tone of the day is not yet set. It is set to some extent but not yet set. And there's a fight between the buyers and sellers. As there's a fight between the buyers and sellers, the undertone of the day is decided not yet. And when there's a breakout on either direction after some correction, sideways correction, then you enter the trade and you take something out of it. This is the opening range breakout essence. And this happens on certain days, doesn't happen every day. And this, like for example, can happen in a matter of 4 to 5 candles over here. But personally, I would prefer something slightly bigger, something number of candles bigger. It also happens many times right after gaps, because what has happened when the price is gapped? The market has basically does overnight move. So when the market has done an overnight move, it needs to correct and absorb some time correction. That is why this sideways movement happens. And you can take up this opening range breakout. Now just to speak to you in a wider term for all of you, this opening range breakout just does not happen immediately always. It happens in different ways. Like for example, I was looking at the chart of Maruti a few days back and we saw some bullishness happen. There's a strong candle over here. It's called the piercing line, bullish piercing line candle on the daily chart, which was a bullish factor and could have given us a follow through, which it did. Okay. It was a bullish piercing line. Now, same thing on the 15 minute, as you can see right after the bullish piercing line. The next day the price has gapped up and it has rested for a while. Now this is not the opening range, but this is another kind of range. Making it the hourly, this is another kind of range. So this is not purely the opening range, but this is another kind of range, and it gives you the trade in the middle of the day. Doesn't give you the trade in the end of the day, it gives you in the middle of the day. Somewhere around 12 o'clock. See why 9 to 3:30, in that 9:15 to 3:30, why 12 o'clock becomes very important? Because it is the middle of the day. And middle of the day means according to time, that is a 50% correction. According to price, just like 50% correction is taken. According to time, 50% correction is also taken. Right? So if you get triggered a long position with about anywhere in between 1620, 1640, but 6040 itself, you get a move to 62 to 2 to 3. So that's quite a decent move on a stock in intraday. Right? So this is the opening range breakout, but this is on the hourly chart. So this is happening by the mid of the day. It is moving. It is not moving by now. It's moving by the mid of the day, right? Like that. So as I said, on the hourly also, if you notice, the time price is spent a lot of time near the high or low of the day. Like this time is spent on the previous low. Now when it breaks the previous low, there is more downside. The price has spent time on the previous high. When it is broken previous highs after some consolidation, there is more upside. So keep these things, when there is time spent, keep these things as a note. These will be important tools for intraday trading. I mean, if you want to know like about the schedule of intraday trader, etc., then there's another video on intraday trading. Past video is there. There are many past videos which are useful for beginners. Okay, you can really go ahead and do that. Right. I'll take some more questions. I hope all of you are having an interesting time. I hope all of you are having an interesting time. Okay, so please throw some light on Ashok Leyland and auto industry. Abhinav, thank you for the question. Let me see if I have time. I'll do it in the end. First, my priority would be to complete the conceptual things, if you don't mind. If Preetham Das is asking, is moving average factor can be taken into consideration for placing an order? Okay, okay. Is moving average factor can be taken into consideration on order on 15-minute, hourly and daily chart? Is moving average factor? Okay, you answering the same question. That's a lesson. Moving average again is one supporting indicator. It's a trend indicator. Okay. Now all these indicators are of different types and they mean different things. So when I'm looking at a moving average, it's a trend indicator. When I'm looking at a RSI, it is a momentum indicator. Okay. Now you can't just tell me that if there is a moving average, I will take. You have to tell me what moving average. You have to tell me what time frame. Right. You have to say that. Right. And that works consistently if you've backtested it. What you're talking is mechanical. You're not talking something which is creative. Here we are looking at it from a mechanical point of view. Of course, to understand it, you will have to be creative. That you need to backtest. Then the backtesting will tell you if you can do it or not successfully. If you don't tell me, if I say 1 moving average or 100 moving average or 50 moving average or 200 moving average, everything is different. There can't be a consistent answer to that, right? Okay, yes, I'm coming to that point, psychology of intraday trading. Okay. So amongst the psychology of intraday trading, two things which I'll tell you. That first let's understand what the mental biases and behaviors are. Okay, mental biases and behaviors. I want everyone to listen carefully. Just show me a raise of hands. I'm putting all hands down. Show me a raise of hands. Is everyone with me right now? Some of them are looking at their own screens or looking at my screen. I don't know. Okay, nobody's sleeping. I hope it's a Sunday morning. Thank you for coming out today. Stay with me for some time, right? We're towards the fag end of our session. So there are mental behaviors and biases, like fear of regret being one of the points of behavioral finance, where people tend to regret in general. One, and they sometimes take action so that they later don't have to regret. You see, a lot of over trading happens because of fear of regret. Because, as I said, when I see traders evolve, one of the major thing is fear of regret. They think, I made 10,000 rupees, and I held on to this, I would have made 3,000 rupees more. Now I want to re-enter that stock, and you end up over trading. Okay. I'm going to take up the questions as they come in. The second is overconfidence, illusion of control, and self-attribution bias. What happens? Illusion of control. You give the attribution of the trade to yourself. The market phase must be bombastic. Probably you take the trade out of your own idea. But this attribution gives you illusion of control. That yes, I'm in control, I'm doing things. Now the key to have the right mindset as a trader is to have a psychological balance between understanding what is in your control and what is not. Mental accounting bias, very, very dangerous. Very, very dangerous. Again, कल मैं डिनर पे गया था, 1500 रुपए खर्च कर दिए, आज मेरा खर्चा निकाल लिया मैंने. माँ बकवास thinking. People do that. Don't have mental accounting. It's nice to have a goal or a vision. It's nice to attribute some reward to yourself, but don't have mental accounting bias. Be clear. Don't need to trade all the time just because you have to make the money. That compulsiveness should not be there. If you have made the money, learn to sit on the money. Consistency is important, not overconfidence. Fear of regret. There will be never a situation where you will not regret. If you buy a stock, and you make the money, you buy at the lowest price, sell at the highest price, you will still regret why I didn't buy more stocks. Why did I not double my quantity? There will never be a situation where you will not regret. So forget about regret. What things don't hold any regret should be held without regret. And if you really want a clear clarification, clear clarification, I'm telling you all, anyway I do the course or which is the flagship course on Technically Sorted, which you can join. In that also we do a lot of psychology. I'm having a psychology dedicated course once a week I'm doing. It's going to go for 3 months. I'm doing it in a very closed group. That is, I'm not putting it up on all social media so much. If anybody is interested to go for that, you can go for that. It's just on trading psychology. And there's a separate course content for it. Okay. Representativeness bias. Now what is that? Representative biasness or recency biasness. These are all factors which make the technical inputs overlap or analytical inputs overlap with one emotion. One tends to feel that I want to see the stock go up. Now the emotional feeling leads to a rational thinking where they say, I want to see the stock go up, so probably this is the factor which will make me go up. There's this candle, there's a hammer candle, probably it should go because there's a hammer, and I'm right because I emotionally feel it. So they try to mix the analysis too much with whatever, they see the smallest bit of evidence. You see, when you take a trade, there are upticks and downticks, you see. So if you're having a long position, uptick gives you a different emotion, or downtick gives you a different emotion. You have to be detached with that, right? Fairy tale syndrome. I heard this in a TED talk, a very interesting one, that everybody from Cinderella to, Cinderella to Rapunzel, all the fairy tales which have been there, Snow White and Seven Dwarfs, in every fairy tale, the princess or the heroine in question, okay, the one who is the female lead in question in that fairy tale always had a name. But the prince never had a name. He was just called Prince or Prince Charming. Now the thing is that in each of these cases, each of these stories, the prince comes and he sweeps the prince out of her feet, or whatever it is called, sweeps her off her feet, and they live happily ever after. All the problems, be it a Cinderella or a Rapunzel, all the problems dissolve away and they have got a solution because the prince is there. And that's such a potent antidote that it doesn't even have a name. It's just called prince. This is what happens with people when they trade options sometimes. They're making money, but they want to sit on it forever, thinking that one option will make them very rich, all their losses and bullshit like that. So fairy tale syndrome. Cognitive dissonance is when you have unrealistic expectations and you start overlapping your analysis with your emotions, right? So I would recommend don't do these things. Now, how do I actually not do these things? How do I, sort of find a solution to these things? My personal analysis is that there are three videos I have on trading psychology. Just see them in and out. There are much details in this. A bit of mindfulness activities, a certain degree of clarity with your strategy, and most importantly, which most of people miss out, uh, most of the people miss out on this very, very super important factor. And what is that? That important factor is that, they have not really, just imagine you're playing a game of chess, okay? you're playing a game of chess. Just imagine you're playing a game of chess, and you want to beat the master, the grand master of your school or your college. You want to beat that person, and you don't even know how chess is played. You don't even know how the bishop moves or how an elephant or a pawn moves. You don't even know these things. And you expect to go and play the game of chess and master it? Just imagine you going and playing a chess with a master, wanting to beat him will make yourself look like a fool. So the first thing is to go ahead and learn. Learn. You can learn from me. You can learn from any source you want to. You will have to, sort of invest in yourself, get hold of those resources of learning, and that is going to give you 5 times more the return than opening any of these social media apps and looking for ideas how to trade. I say to people very openly, you are ready to risk your money if I give you an idea, but are you ready to risk your money and investing in yourself and learning from me? There is a huge difference, because no matter how much you want, the speed of the market is such that it is highly, almost impossible to cover everything up in giving a paid or a free recommendation ever. That is why I don't believe in recommendations or tips or trading calls. I personally believe that there is hardcore learning which matters, and a hardcore skill development as to what suits your personality. That's what matters. And if you see, there could be endless examples I could give you of very big moves or small moves, of OIB trades, of previous days high, low breakouts, of how to understand, which gaps are more reliable, which are not. These are just a small fraction, a very small fraction of the total of things which we do in the course. Technically, it's not a 15 session course, and if you want to join that, you can contact my team. You can contact, my team, and they will guide you through with the entire course content. It's a lifetime course. It's not just 15 sessions. It goes on for lifetime. And in this lifetime course, what happens after the 15 session, we have one session a month with all our students, and we learn with some new special topic in hand. Sometimes we learn sometimes with you know the doubts from accumulated doubts, because your evolving never stops. So you keep having doubts, and that can always be answered in these monthly meetings. So we have a very vivid way of doing this, and if you want to join that, you can join that. It's a lifetime thing, as I said. Yes, okay. So Nitesh ji, I think your answer will be solved if you join the course. Mr. Sai Dinesh is again asking a very interesting question. He says that, sir, some of trainers tell with using only one indicator and put the candlestick pattern, it will work out. Believe me, Mr. Sai, there would not, I understand whom you're talking about. There are many trainers who make it simplified in front of you so that it sells better. Okay. The selling factor is the only reason why people say it. I don't know if it will make fast money to you, but it will definitely make fast money to the trainer who wants to give a shortcut, give one or two candles and one or two indicators. It doesn't work like that. Believe me, if it was so easy, then he wouldn't be teaching it and nobody would be needing to learn it. If it was so easy. Market moves in different, and the complexities go as we go in time. The market microstructure changes, the complexity changes, right? I'm someone who has learned from CFA, which is Started Financial Analyst, for fundamental analysis. I've also learned from CMT. I've completed all the levels of the CMT exam, which is Started Market Technician. These are the two best courses in the world for fundamental and technical analysis. Not at all, I do not believe, it's been so many years, people are following me, I don't believe that one or two indicators can help you or one or two candlestick patterns alone can help you. No analysis should be used in isolation. It is always a combination of multiple variables and concepts, and upon what the market phase is offering you and upon how well you know how to read it. That is what gets you started. There have been traders who have come to me who are retail traders. I can literally say that, they have come to me as people who are completely new and in some cases a little mentally beaten down in their trading. but by the time they've done the course, they've left the course, or 2 months, 6 months after the course, they've gone bombastic. Yesterday only I got a message of a student. He got 10 continuous days streak of winning, 10 everyday profits, with the highest profit being on one trade being 25,000 rupees, 10 continuous days. Now this guy, when he came in March, he was a newbie to the subject. So, and some of my students are here right now also in the this thing. I can see the list. I can see some of the students are here also, because there's this ever continuous process of exchange that we have and learning. All right. So please don't go for shortcuts. Don't fall for shortcuts. Don't even fall for the fact that you will, get some recommendation. It will change your life. It will not last in the long term. And life is much smaller than we think sometimes, and we underestimate what we could have done. What we could have done yesterday, and we overestimate what we are going to get done tomorrow. Okay. Mr. Sai Dinesh, my team will contact you if you want, and also you can contact them, and all the details will be given to you. You all can also visit www.technicallysorted.com. There all the details of the course and myself, everything is given, and my team will get back to you, Mr. Dinesh, not an issue. If you want to, you can contact them first. Preetam Das is asking, candle forms resistance and support more powerful as compared to where else it is formed. Which candle? I didn't get you. Which candle forms a resistance and support? It depends on the kind of candle you're looking on. It is not, every candle is not the same. There are many different types of candlestick patterns. Like when we do candlestick, I give a entire handout. It has got different patterns, different positioning, different factors to be seen in every candle. So it's not, you can't just say candle. Okay, so you're trying to say hammer forms a resistance and support more powerful as compared. No one point forms a resistance and support. Hammer can be evidence for certain confirmation. If you're wanting to look for this thing, the hammer will show you that now I am moving up from here. But that's not just about one point. Okay, so that you keep in mind. It's not just one point. So guys, this is the website, and here you could go for the, this is the course details over here, and we're going to start 21st September, which is Saturday. And if anybody wants more details and more questions asked, you can see a lot of YouTube videos are there, and those who are not following me on Telegram can follow me on Telegram, right? I think the internet is a bit slow right now. So, okay. So we've got all the details over here, from session 1, session 2, to all the 15 sessions, what is going to go on. You can check them out. We have options, Elliott wave theory, etc. So ladies and gentlemen, thank you today for being here with us, and thank you here, thank you to my team and myself to put all this together for all of you. I hope you had a great learning experience, and I hope you really learn more and really get into raising your game, making it better, and have a great time trading in the coming week. Apply, test, back test. There are a lot of things which have been shared, etc. And I'm really glad that all of you showed up on a nice Sunday morning. And it is, something which I really feel happy about, because I use my weekends in a productive way. Because any way our lives are full of so many different kinds of distractions, etc., entertainments, etc. There's too much out there, right? You can contact on this number to get in touch with my team, right? Thank you, Mr. Jitendra. Yes, absolutely, very nice and practical session. Thank you very much, Mr. Preetam, Mr. Vijay, Sai Prasad ji, Hitesh ji. Do get back to my team if you are interested in the course, and definitely I will look forward to you in any other such session, and we'll have another studied way of going ahead and learning more. I hope I cross my path soon again with all of you. Thank you, sir. High and low concept was great. Thank you. Swapnil Gaikwad, thank you. Vijay ji again. Absolutely. Vijayji, I would recommend you to actually talk to my team once and talk to me. And second is look for the psychology videos. We're going to have some interesting things to talk about. So get in touch, not an issue. Thank you for such a nice session. Again, thank you very much, everyone. It was really a blessing that all of you come and so many people come to my webinars. And thank you everyone from all over the world and all over India. Uh, Thank you so much. Take care. Have fun. This will be on YouTube. Please share it with your friends and like and share and subscribe if you've liked it. Thank you everyone. Goodbye and see you. Enjoy. Thank you. Happy Sunday to you. Thank you. Yes, I present it. Take care. No problem. We can always work on that. Okay, Sai Prasad ji. We can work on that. You call me, no problem. Chalo. Thank you. Bye. Everyone, goodbye. Enjoy. Have fun. Take care.